It's an almost all green screen as stocks react to Trump's 90-day pause on tariffs after a trading holiday on Thursday. Metals and consumer durables, the biggest gainers today.
TCS misses the mark on revenues and margins as decision-making slows on Trump's trade tattle. The management points to some ramp downs but no cancellations and remains hopeful of a better FY26 on the back of a strong order book.
Tata Steel plans a significant transformation of its Dutch operations to improve competitiveness. The proposal involving a workforce reduction will be implemented post-consultations with key stakeholders. The stock gains on the news.
A US court lifts the injunction on Sun Pharma's drug launch, while Cipla gets a US FDA assent to sell a cancer drug, while Biocon Biologics' arm receives the go-ahead to sell a $2 billion biosimilar cancer drug in the US. These stocks perk up.
The RBI issues guidelines for gold loans that clearly define these loans, set out loan value limits and cap exposures of lenders. The guidelines aimed at addressing risks in the segment are seen as crimping growth for players like Muthoot Finance.
It's a roaring day for the bulls. You're coming back on the back of a trading holiday, but they want to go into yet another long weekend on a high. You're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Manglam Malu. And Manglam, well, a lot of the bulls were hoping that the market should have been open yesterday, but I don't think they would be complaining today too much either.
Well, they won't be complaining too much either, but yesterday would have been a different one because had it been yesterday, it would have been weekly options expiry yesterday instead of day before yesterday, and further short covering would take place as well. But be that as it may, it's not, wishes were horses and all of that and stuff. Good trading session so far. The good part is that we've, made a double bottom at 21,950 to 21,750 sort of zone. From there itself, we've kept moving higher. And if there was one genre of music that the market would listen to, or market participants would listen to over this long weekend, would definitely be heavy metal. The reason why I say that is because the decline in the dollar index has led to an increase in commodity prices. Some sort of relief coming by on tariffs implies that maybe, for the near term, there is not that uncertainty over global growth. And add to all of that, there are specific news pieces that have come by for the likes of Tata Steel, etc. as well. So that stock, doing well. But we have Hindalco, which is up 6% as well. But the counterbalancing factors today have been in the IT pack. On the one hand, you have this 90-day pause, which may be looked at as a relief for IT stocks which were under pressure earlier. But on the other hand, we have a mild miss coming in from TCS's earnings as well, because they're speaking about delays in decision making. Rima joins in with more. Rima.
Thanks so much for that. A quick recap of the numbers first. Subdued quarter, modest miss on the company's top line. Revenues have declined in Q4. One, there's typically weak seasonality, and then you had macro uncertainty. Some of the decision projects which were expected to start in Q4 got delayed, and that also hurt the company's top line in Q4. So revenues have declined by 0.8% in quarter-on-quarter, and margins declined to 24.2% despite the BSNL, low-margin BSNL revenue deal getting ramped down and some rupee depreciation because the company made some tactical investments. On the macro environment, because we quizzed the management a lot on that, they said that they've seen some project delays, some decision-making delays, but there is no major ramp down, no major project cancellation. It's not that tech budgets have been tightened in a very big way. So in that sense, clients are not panicking. The company maintains that FY26 growth, at least for the major markets, in the major markets, you mean the US, Europe, UK, etc., will be better than FY25, which according to some analysts was about a 1.2% kind of a growth. That said, the company clearly is worried about the macro uncertainty because they have decided to pause on their wage hikes. They typically give wage hikes 1st of April, but this time they're saying due to the macro uncertainty, they will take a call on when to roll out wage hikes. Let's quickly run you through the brokerage view. The bullish view is TCS's valuations are below the 10-year average, which is why UBS has a buy rating. But Ambit says that the current valuations still factor in very high growth. The current valuations expect the company to grow at 8%, which is not happening. So therefore, they have a sell view. The moderate view is from Jefferies and JP Morgan. So Jefferies has a hold rating, target price 3,400. JP Morgan says Again, neutral rating, and their view is the company will underperform peers, Infy as well as HCL Tech. But on the other hand, that underperformance gets balanced by the company's very strong capital allocation policy. They give out, they typically, more than 100% of their profits is shared with the shareholders. So that will cushion the downside, and investors could look at it as a factor, especially when we are in a low interest rate environment. Back to you.
Indeed, Rima, thanks a lot for that. Not moving the needle much is TCS, but has still recovered from the opening low, still 0.3% higher, now back in the green. Is India's largest IT company. Let us also now listen to excerpts of the conversation that both Rima and Prashant had with the management.
Obviously, we also been watching the news like you've been. Our customers are also doing that. But what we are saying is many of our customers are also in a wait and watch mode in terms of what is the end game going to be. But good thing is, like whatever we have seen so far, as much as the rhetoric, we have not seen our customers panic. Like there are maybe some programs what we thought that they would kick off, but some delays in decision making. But we have not seen any major cancellations or no major project ramp downs. Like there are few, but no major. So I don't think there is any major negative reaction so far. But have I seen any major budget cuts? I have not seen any major budget cuts. I have not seen any major project cancellations. There are some tactical ramp downs here and there, but I won't panic at this time.
Was Q4, have you managed to steer clear in Q4 of this macro uncertainty, sporadic instances of ramp downs or project cancellations, or did Q4 also see an impact?
So the positive side of Q4, okay, all the major markets grew. Probably I think this is the first time in this year where all our major markets had a positive growth. And even from the business verticals, if you look at, of course, BFSI has been growing. BFSI, like every time I've been reporting BFSI in North America, but this time BFSI in Europe, UK also grew. And we had growth coming in energy resources and even comms. So we had, of course, comms and all grew marginally, but of course, all of them had a positive growth. So overall, if you look at from a major market perspective, it's been a good number. But was there an impact? Yes, there was an impact. There was an impact.
What was the extent of the impact?
See, I'm not going to quantify how much was the impact, but there's a marginal impact.
Okay. And what happens to the early signs of discretionary spending that you spoke about 3 months back? Where are we at?
See, if I look at this quarter's, the other indication could be our order book. Okay, our order book has come in still strong. In fact, better than last quarter. Our order book is at 12.2. And of that, almost close to 7 billion has come from North America, 4 billion in BFSI, and close to about 1.7 or 1.6 coming from consumer business. And if I look at the discretionary spend portion of that, it remains same as the last quarter. And the good thing is, all this 12.2 billion has come in without the support of any mega deals also. If I take mega deals, this is actually the highest TCV in our recent history. So, so where I'm coming to, discretionary projects have not died down. There are probably some pause, and clients are thinking, should I start now or should I wait for a couple of more months till some certainty emerge? But otherwise, there is no major disruption to the overall situation.
What's the percentage of discretionary? What would you call discretionary as a total?
I would say about 30-40%. Like I don't know.
We are not calling it out in the overall portfolio.
But roughly in the 30 to 40% or band, possible, right?
Possible. I say the ballpark could.
The investments through the quarter. So we did tactical interventions, mainly merit-based interventions that impacting us by 100 basis points, and another 60 basis points on elevated non-employee expenses, the likes of travel, events during the quarter, and higher CSR expenses.
Q1 wage hikes on track, and given the uncertainty, will the increment amount be similar to last year or lower?
given the uncertainty, you said, we will decide when to do the increments.
So typically, you roll it out 1st April.
Yeah, but this year we will decide when to do it increments based on the environment.
So you're deferring wage hikes as of now.
I'm saying I will not use the word defer, but yeah, yes, it will decide it when it happens.
Kriti, while you're not majorly concerned and you're not seeing major disruptions, major cancellations or ramp downs, there are some instances of it. Sure. Give us some more nuance on that. Which are the verticals which will be most impacted?
As I said, consumer business, auto. These two I hear most often. Like as I said, comms I want to, while we had a growth, but I need to see whether it sustains. Tech business has grown, I think last quarter also it grew, right?
Yes.
But
going forward in terms of headwinds?
That's what I'm saying. Like tech as a professional services could be within tech, like we also include professional services. There could be a softness in professional services. So I would say from order wise, like consumer business, which includes retail, CPG, travel, airlines, and auto and professional services. I would say these could be softer. Core banking I'm finding so far resilient, and there are good opportunities in pharma and healthcare.
And last time you also said that FY26, so calendar year 25, looks better than calendar year 24, especially for the international markets. Do you hold on to that?
So if you look at our FY25 growth, it's been better than FY24 growth. However small the difference is.
What about this year?
That's what I'm coming to. So I believe FY26 will be better than FY25.
Stripping out.
FY26 will be better than FY25, the big takeaway from the CEO of TCS. We take a short break. We get you more on the markets on the other side and also put the spotlight on the March mutual fund data. Stay tuned. Welcome back. 22,900 now on the index, odds 500 points higher exactly now. It's a wonderful Friday for the bulls as we speak. The highest point of the day for the index, led very ably by a lot of these metal names, be it Hindalco, be it JSW Steel. A lot of these metal stocks contributing to the gains in today's trading session. And it's not just the Nifty metal stocks. Of course, some of the other broader market names too seeing very healthy gains in today's trading session. There you can see Hindalco now 6.25% higher at the highest point of the day, and JSW Steel as well. Gravita India is the top gainer on the Nifty 500, 12.5% higher. Sarda Energy, another 12.5% gain there as well. So great going for a lot of these metal names. But put the spotlight on the March mutual fund data, then the equity inflows declined for the second straight month. But Winnie is joining in with the key highlights of the AMFI data. Winnie.
Hi, afternoon. So yes, we're seeing that overall, when you're looking at the flows also, there has been a decline. One, do not forget this is year end, so there are a lot of adjustments that are made as well. And liquid funds especially have seen a bit of a decline coming in this time. Corporates, treasury side, this is something that is impacting the overall performance and year end market volatility that we've seen in the recent time. Other main three factors impacting the inflows, equity inflows, and that is why we're seeing a bit of a decline on that front. Now, obviously, equity segment, the inflows, they came in for the 49th straight month that we've seen inflows coming in on the equity front. So that's not a bad sign there. Though there have been the lowest that we've seen coming in since April 2024. Last time also, we were seeing at those lows levels. So that seems like it's continuing this time as well. Second straight month of a bit of a decline in terms of equity inflows on a month-on-month basis. Now, total AUM, when you're looking at it, the total AUM is up by 2%. Interestingly, what is the equity in AUM also, net asset under management for equities, that has seen an increase of almost around 7% on a year-on-year basis, month-on-month basis. So that means that there is some deployment, seems like a bit more in terms of that point of view when you're looking at it for equity inflows. Now, SIP contribution coming in at 25,926 crores versus 25,999 crores. A bit of a decline on that front as well. But yes, still around and about the 25,900 mark. Small cap funds inflows have seen a sharp increase this time on a month-on-month basis. Mid cap inflows muted, 1% growth there. Sectoral funds, that's where the decline has come in. We've seen the trend on sectoral funds losing the fizz over the last few months, and now that has furthermore intensified because that is at 171 crores. That is down 97% on a month-on-month basis. NFOs also third straight month that we're seeing 4,000 around that mark. So 4,885 crores is what we're seeing. Weak inflows coming in for the NFO segment as well. And gold ETF this time have seen an outflow versus an inflow last month. So interesting data points coming in on that front. And we'll watch out for what's going to shape up in April, given that volatility is still something that has continued this time.
Take that point, Vinny. Thanks a lot for that. So we'll watch out for that. SIP is close to around 25,000 crores for the 3 straight months. Just keep an eye out on ONGC. That stock's now moved to the high point of trade. We've seen a bit of a spike in crude prices over the last couple of days. Now it's at $64 per barrel. Nothing really to worry, but the fact that they've stopped falling for now has kept these stocks higher. Take a short break. On the other side, Ajit Mishra of Religare Broking joins in with some trading strategies. Well, it's a 500-point rally that we're seeing on the Nifty right now, just as we speak, virtually closer to the higher end of today's trading range so far, and that's led not only by the stocks that have been doing well so far. We spoke about ONGC. Just pull up Reliance, maybe. Yes, that's the one that is powering the frontline index ahead. So we have HDFC Bank, Reliance, ICICI Bank, all of them contributing well, but just the last smidge of an up move has come in from oil and gas players, and Reliance is most definitely one of them. So ONGC is up around 3.5%. Reliance is the big boy out there, which has powered the Nifty ahead above that 22,900 mark. Let's get in the F&O perspective on the market then. If you look at all the frontline indices, all of them are doing well today. We have the Nifty, the mid-cap index, the Nifty Bank, all of them up and about in today's trading session. And in them going higher, what we've also seen is that volatility has gone down. So that's a good sign that we've seen. The India VIX is down about 11%. The other thing that we're looking at is the advanced decline ratio. That's telling you that the breadth of the market is firmly in favor of the bulls. We have, both the advanced numbers and the decline numbers. 2,300 stocks in the green for about 219 stocks in the red. And that line has been the train track through this morning itself, telling you that there is a firm amount of support. The Nifty Bank also importantly has crossed its 100-day moving average, even as we're seeing an up move in Nifty Metal, Nifty Pharma and the Nifty IT indices, the ones that get most benefited from all of this. The Nifty Bank has crossed the 100-day moving average. So does it, 200-day moving average rather, does it cross past that or not is the big question. And if that were to happen, then we are looking at the Nifty, looking at some of these technical levels as well. 22,960 is the 50-day moving average. 22,992 is the 20-day moving average. For all of this to happen, we have to look at, the 23,000 call. Those call writers are fairly active in today's trading session. And at the lower level, we are seeing some put writing visible at, 22,500, 22,700 as well. Watching out for a couple of stocks. PI Industries and CAMS are seeing some long positions being added. And we are seeing some shorts being added on Muthoot Finance, understandably because of the RBI news that came by.
Muthoot Finance at one point on Friday was down 10%, still recovered some ground but ended 7% lower, adding on to those losses in today's session as well. By the way, Sarda Energy is now up 15%. At the highest point of the day now, is the top gainer on the Nifty 500, and a couple of these pharma names too making a good mark for themselves in today's session. Be it Wockhardt is up 9%, as is Jubilant Pharmova. That too is seeing healthy gains in today's session. A lot of these smaller pharma names are making a mark today. Kaplan Point is the other one, 7.75% higher there as well. Suven Pharma is up 7%. And a lot of these moves have come in the last few minutes. If you see the intraday charts of all of these, you can see a lot of these moves have come in the last few minutes. Suven Pharma too at the highest point of the day now, 7% higher on that stock as well. Good time to get in Ajit Mishra, the Senior Vice President of Research at Religare Broking, who is joining us now on the show. Ajit, good afternoon. Thank you for joining in. What do you do after a big gap up like this, right? Because you're now up 500 points. The Nifty is now at that very important 22,850, 22,900 levels, still struggling to cross that. But once it does, what happens next? And what are your stock recommendations this afternoon?
Yeah, good afternoon, Hormaz. So yes, we are back to the square. Means we've started this journey of this week with a sharp gap down, and we are ending the week almost at a similar level. Means 22,900 was the zone basically where we closed, pre-tariff era. So now 20 EMA Hormaz 22,900 is what we are currently striving to sustain and reclaim. Once we do that, then probably we can inch toward to the long-term averages around 23,300, 400 levels. Banking has already reclaimed those areas, so which is definitely a positive sign. Like Mangalam was mentioning about India VIX also seeing some cool off, which is the added positive. So now sustainability is the key. So let's say if we manage to hold these key areas, definitely we are eyeing higher levels or further recovery in days to come. So keeping that in mind, obviously, the sectors wherein we are seeing strength, FMCG, like after this prolonged underperformance, we are seeing Marico outperforming within the sector. The stock is almost trading on the verge of making a new high. 750 is what we are eyeing in Marico in the near future. So with stop at 688, one can accumulate Marico at the current levels. Then we have from the banking heavyweights, Kotak Bank, where after the marginal dip, the stock has again filled the gap, and we are again seeing fresh momentum in the stock. So 2250 is what we are eyeing in the near future. The stop at 2075, one can accumulate Kotak also at current levels.
What about a lot of these pharma names, Ajit? They are doing very well for themselves in today's session. I'll ask you a question on the metal stocks as well. But a lot of these smaller pharma names is what I wanted to draw your attention to. Be it Wockhardt, Kaplan Point, Jubilant Pharmova. Is there anything among these that excite you, or would you like to stick to the large cap pharma names?
So in fact, if you see, Hormaz, that Wockhardt didn't slip below its major averages, long-term averages, which is definitely a positive sign, because the way the stock moved up from 150 to 1650, it was more of time-wise correction that we were seeing in the stock and still holding above these levels. So this seems that probably this relative strength is likely to continue ahead also. And 1600, 1650, the previous swing high is something that the stock might attempt.
And what about these metal names, Ajit? Hindalco, Tata Steel, a lot of them doing well for themselves today. Also for the likes of Sarda Energy. Anything that comes on your charts here?
So here, metal definitely means we have seen a decent recovery, and Hindalco is definitely among the top performing names. But the way mostly metal counters were under pressure, I believe that one should wait for some stability or some base formation before making any substantial move. Sharda at the other end, still we are seeing consolidation to continue in the near future. So for a time being now, it's prudent to avoid any aggressive bets in metal and Sharda Energy per se.
All right, we take that point. Are there any other stocks that you've listed out for us today that you wanted to talk about?
So like banking definitely is something, Mangaram, which one should continue to keep a focus on, because in this entire negativity, we were seeing that banking is holding above its major averages. It didn't breach its previous swing low. So large cap names like ICICI, Kotak, HDFC Bank is something definitely you should prefer. So despite all this, choppiness that we are seeing in the market, we believe that this kind of outperformance might continue in banking and financials in days to come as well.
Right, take that point. A big move is what we're seeing on Aarti Industries right now, up nearly 6.5%. Also, Laurus Labs along with Patanjali Foods are a couple of stocks which are spiking. PI Industries at the bottom of your screen, already spoken about by our ticker team. Take a short break. In fact, as we do that, let's hear out what the economist Jeffrey Sachs had to speak about India getting closer with the United States at the expense of its ties with China. Is there a risk out there? He spoke with Shireen Bhan. He did say that India should not be anti-China to just please the United States. He said that the US President Donald Trump is wrecking the global economy. Listen in.
Market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement.
For the trading week. Let's get into what we're seeing at a sector level, those that are perched higher and where the repositioning is taking place out of the gates today. It's construction and materials. We are up 1.3%, followed by basic resources. Technology are putting on 1.2%, autos and media. So some of the cyclical arms of this market are the outperformers first up today. The underperformers. Let's just catch up with those names to the downside. It's oil and gas, and that has been a fade around the economic resilience that we may see because of the tariff uncertainty. There are concerns still growing about the potential for a recession. That's not disappearing at this stage as we see the US and China still slug it out. So oil and gas as a sector is down 0.25%. Insurance showing us some slippage. From there, we still see green, but these are the underperformers from telecoms to real estate, travel and leisure. I've got to say, what a ride it has been for real estate this week, trying to judge the trajectory for interest rate policy, thanks to the flip-flopping around this trade signature policy. To the European bourses and the starting point, let's see the levels that we've got. The FTSE 100, we're up almost 0.8% thanks to that resources trade this morning. So you can see we're just shy of 8,000 points. The DAX, we're not going to get a signal there for a bit, but we were called higher. 1% pop on the French market. Yesterday, it was up about 3.8%, but still trading down 2% for the week. The Italian market also marching firmer. It is one of the better markets on the upside sometimes, and you saw that again yesterday, outpacing the other core markets, putting on about 4.75%. But again, it is still sitting on losses for the trading week of 1% before the session. So trying to close the gap, and we might be getting to that break-even point. So again, one of those weeks where you travel a long distance intraday to go pretty much nowhere for a trading week, telling you about the volatility. Let's get to some of the other indices across Europe. The starting point for some of these markets, and you can see the DAX just opening there up more than 1% too. Now the SMI 0.6 north, 0.8 on the Spanish market as we talk about trade between the Spaniards and the Chinese. The AEX is up 0.8 and the Portuguese market 0.9. In the round, consistently to the upside is what we're witnessing as the starting point, Sylvia.
I want to take you to UK bond market because we got a new GDP data earlier today suggesting that growth came in 0.5% on the month in the month of Feb. That's ahead of economists' expectations, with growth across the services and manufacturing sectors. Now, the Chancellor, Rachel Reeves, described the figures as an encouraging sign, but warned against complacency. So just a quick look at how we're faring across the yield space.
Right, so that is the European market, just like our screens as well. The European indices, all of them in the green across the broader markets doing extremely well, as we're seeing the bonds do well as well. And that exactly is the CNBC edge that we bring to you from all the experts from across the globe, the wide network that we have at a time when there is so much uncertainty around Trump tariffs and all global markets, etc., all through the day and thereafter as well. Even after the Indian market shut, we get you the CNBC Edge. Speaking about Edge, let's get to our special segment, the Insight Edge, where Rima focuses on AurionPro Solutions, the stock up 15% today after the management spoke to CNBC-TV18. Rima.
So AurionPro is the big mover in the mid-cap IT pack, and as you rightly pointed out, you chatted with the management too. Now the company has announced a 100% stake in a Hyderabad-based software company called Fintra Software. This is a company which has software solutions for wholesale banking companies like trade finance, supply chain finance, escrow, factoring. Small company, they will be paying 23 crore. The acquired company had revenues of less than 1 crore rupees. But this is the third acquisition the company has done in the last 1 year. And all three of them have been fairly small. We spoke about the current one, which helps them expand into the wholesale banking sector. In December of 2024, they expanded into Europe by acquiring Phoenixes. And in April of 2024, they further strengthened their banking channel by acquiring Arya.ai. We also chatted with the management today, and despite all the macro uncertainty, they're still very bullish. They're saying the demand environment is strong, not very affected by what's happening globally, because they get 60% of their revenues from India. They're just expanding in US and Europe. They've grown 30-35% over the last 4 years. No reason why that may not continue, and maintaining their FY25 guidance of 1150 to 1200 crore rupees in terms of top line. Stock is higher today, but bear in mind it's also down 50% from its 52-week high.
The demand environment, I don't think there is any change. We have, I think we've grown at about 34-35% now for 4 years. So there is a strong trajectory of growth. Demand environment remains reasonably strong. And US is less than 10% of our revenue, so it's not really a big market for us. I think that will sort of do what it do. If the entire world goes into a slowdown or something, then I suppose it affects everyone else. But for now, we don't really see much change in terms of demand. 3.5, 4 years back, FY21, we did 375 crores. This year, our guidance is to do between 1150 and 1200 crores, right? We'll see where we land up. We have a stated Vision 2030, where we have sort of the external articulation is qualitative. Obviously, we got an internal articulation of Vision 2030, which is quantitative targets and all that stuff. So we have numbers going from now till 2030. We've so far tracked ahead of it. The stated ambition is to be a top 3 global player in each of our chosen spaces. If we keep going at 30% from now till 2030, it will be probably 3 or 4 times, right? So, I mean, an Excel sheet exercise would take you there, right? We don't intend to slow down, right? We will not publish a number 5 years out, but we don't intend to slow down. So roughly, I think we will try to keep the growth trajectory we've been on.
14% higher AurionPro Solutions at the highest point of the day. Great going for that mid-cap IT stock part of our Insight Edge segment. We'll take a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back. Welcome back. 480 points higher still on the Nifty. We spoke a lot about gainers. Let's also look at some of the stocks that are bucking the trend in today's session. But just before that, pay attention to Rail Vikas Nigam, RVNL, which has emerged as the lowest bidder for a Southern Railway project worth 143 crore rupees. So railway stocks coming back into the limelight. 1.7% higher is RVNL, of course, significantly off its all-time high levels, which is around about 650 rupees. From there, it's now down to 350. So RVNL and order win, the stock in focus. But a stock that is bucking the trend other than Muthoot Finance, as Mangalam just mentioned a few minutes ago, is Max Healthcare. Is around 3% lower there. Jyoti Laboratories was up 10% on Wednesday, seeing some bit of profit booking from higher levels there. 2.5% lower on Jyoti Laboratories as well. But putting the spotlight on Apollo Hospitals, who's looking to increase capacity by 2,500 to 2,700 beds. My colleague Parikshit caught up with Apollo Hospitals' Shobna Kamineni and started by asking her about the growth and expansion plans of the company. Let's listen in.
Apollo Hospitals, we saw that there was a necessity as our, as capacity of most of our hospitals is close to about 75+%, and we had to move into that new expansion. And I think my sister Sunita is always very cautious, but at this point, we were able to actually get some really fine properties, whether it's Gurgaon, Pune, Mumbai. So these are cities that we didn't have enough presence in, and moving there, and of course we're expanding in Chennai, doing another one in Hyderabad. So these are cities that we really have a strong presence. So going deeper into cities that we are, and moving into other new cities. So yes, there's some exciting expansion happening in Apollo.
Right. If you can give us some numbers to quantify that, how much would you be investing in this expansion in FY26, and what is the overall bed capacity that could increase as a result?
So we're looking at increasing about 2,500 to 2,700 beds, and of varying investments, because some of them are really high tech, from things like a proton to a tertiary type hospital, to just augmenting some of our secondary. So with all that, I think we're looking at something of over the next, we started last year. So the cycle of it, the investment cycle, would be anywhere in the range of 3,000 crores.
Okay. Speaking about the story of Apollo 24/7, this enterprise is now completing about 5 years. Could you give us a sense of the journey so far, and the contribution of Apollo 24/7 to the larger group?
So sometimes, I like to say that we're actually a COVID baby. We started on February 5th, 2020, just before the lockdown. And during that time, it was almost a trial by fire. We didn't sleep for at least 18 months, because all of a sudden you've launched a platform and you expect to kind of grow slowly. And all of a sudden what happens, it hits you when you get 70,000 orders a day, when doctors who are shut off from their patients, we onboarded 3,500 doctors in 45 days to be able to connect them to their patients. So this really is the ethos, the story of why we're there with that. We could have been just, creating an omni-channel, just making sure that pharmacy is doing well. We know that e-commerce, there was 1mg, there was PharmEasy and all these. So we said we need to have another muscle, and this is another capability. So we could have done that. But I think we stepped back and said, that doesn't serve. It still is so transactional. What is it that a patient needs? And it was so fortunate that we really had a platform that had consultation, that would give people diagnostics, that would be able to give them medicines. And just that capability that we started with was just amazing during that 1-2 years. Of course, there was a lot of failure, but then you're flying midair and refueling and keep changing. And then post-COVID, we fell off a cliff. Just like the rest of the world, telemedicine, they were almost, everyone wanted to come back to see their doctor. Then even in the other part, we were really burning, thinking we're an e-commerce company. So I think the last 2 years really got our act together. So I think this is the time that it's a very short maturity cycle to think that in 5 years you can go from start to actually becoming mature and profitable. But that's the journey of Apollo, that we had the capability to do it.
Right. So it was almost like a startup in a sense.
Totally.
Totally. And, startups sometimes have a long road to profitability. How has that panned out for you?
So I think they had at the beginning, they always said that it's a disadvantage to have an old founder who didn't understand burn with this, when they kept coming to me with metrics and saying...
You can't call yourself old from any angle.
No. But look, I'm not. This is a business. E-commerce is a business that my kids should be doing. So they said, you don't understand this, of how you have to burn and you have to do all this. And then one fine day, I really learned. I listened for 2 years, and then I said, enough. This just is not working. How can a company work that loses money? You have to make money. And at that time, when we really sat down and said, and we did a lot of true navel gazing, and we said, we have these customers. We have 40 million people who are loyal, who love us. How do we serve them better? By being omni. And I think that was the eureka, that we really started, doing so much better. So I would think the journey of the last 2 years is just refocusing on our customer, saying that how do you serve these customers better, and then more will come in.
My final two questions, ma'am. One would be about the impact of Trump tariffs. He has imposed tariffs, then he has put a pause on it, then he said that the 10% baseline will continue. He gave a carve-out for the pharma sector, then he said, please be warned, pharma tariffs are coming like never before. How do you see this impacting the healthcare industry, the pharma industry, with investments, with manufacturing and operations?
I think with a large domestic market, so there's going to be a lot of focus on trying to sell. Even so, I feel for the Indian pharma. It's an $8.8 billion export business, and I don't think that Americans will allow Trump to take that away from them, because that's the only place they're getting a price advantage. So that's there, park that. But I think what's happening now is, for the last couple of years, I've noticed actually the last decade shift is that Indian manufacturers have become dominant in India. It used to be that the foreign guys would come to India and import a lot of drugs. Now the top 10 sales of sales drug pharma companies are all Indian. And that's fantastic, because they've seen a large addressable Indian market. And this is something now that even the foreign markets want to come into. How can I get into India? So India's in a sweet spot with regard to this. And the fact that we have our own barriers, because the MRPs are so low. They're the lowest in the world. In one way, I'm so happy for the Indian customer, because they buy medicines cheaper than anywhere in the world.
Welcome back, and joining us now is Amit Goel from Pace 360. Amit, hi. Interesting times and unprecedented numbers when you look at gold as charts at $3,200 an ounce. What is it that you would advise investors?
Thanks for having me on, Manisha. So the sense which I get is that the world is getting out of US dollar and US treasuries. They are looking for safe havens, because obviously this is like a crisis time for the financial markets, and the only assets which used to serve as havens, dollar index and US treasuries, they are actually they are the asset classes where everybody wants to exit. So people are investing in gold because they think that's the safe haven. That's like the only safe haven in town now. So we are contrarians to the core, and my sense is that dollar index, which is close to 100 levels now, it was 110 in January. My sense is that I don't see dollar index going down significantly from here. It is probably looking for a bottom. US treasuries are probably looking for a bottom. And my sense is that everybody wants to buy gold, and there are hardly any sellers in gold, because of which the prices have moved up by 10% in just the last 48 hours. My sense is that gold does not have much way to go higher, at least in the near term to medium term. And I would rather bet on dollar index bottoming out, and I would rather bet on US treasuries bottoming out.
So, Amit, what is your sense now? If we do see some correction, and I'm calling it a correction from these levels, where do you see supports coming in, and would those be good buying opportunities yet again?
Absolutely, Manisha, because see, long term, the case for gold is still very, very strong. So gold was range bound for almost 6-7 years before it broke out in 2023-24. And my sense is that breakout is for real, but the extension of the breakout to 3,220 odd levels that it made today, I think that's pushing it a little too far. While it, of course, it can still make a higher high at 32, 30, 40, 50. It's very difficult to exactly say what's the top going to be. But my sense is that over the long term, gold still remains a very important asset class for the next 3 to 4 years. For the medium term, it is looking toppish. So my correction levels over the next 6 to 10 months are probably going to be like a 2600 level. There is a wider path for it to go down to 2600. There is a much narrower path for it to go down to, let's say, 2400, 2500. But if it goes down to those levels, even if it is 2600, it would be a very, very good buy because the long-term fundamentals of gold are intact, though it's a little overhyped and over-exaggerated story in the near term. And it doesn't work like this that, in the current global plumbing, the way the global plumbing of the markets happens, it's not that US dollar can go down the tube and rest anybody else can survive. There is no other currency in the world which can literally go up and still survive as an economy. So my sense is that there would come a point where people would not want to buy gold, and that would probably be good enough to give it a correction of 15 to 20% over the next 6 to 8 months. But at that level, it's going to be a phenomenal buy.
And when that buy does happen, then the next 3 to 4 years, how do you see that, Amit? Because we've got reports suggesting $4,500 and even $8,000 announced by 2028.
We've always given a target of $4,000 to $4,500 an ounce. That's like a low-hanging fruit for us if we look at 2028, 2029. And my sense is that while the path to 4,000, 4,500 is very, very wide, which means that the probability I can ascribe to it is more like 80% or even higher. But yes, there is a somewhat narrower path with a lower that it could skyrocket to $5,000, $6,000 an ounce. But my sense is that people, while of course we should be aware what it can go up to in the long term, but we should not allow ourselves to buy when there is like a frenzy to buy gold. But yeah, long term, the fundamentals are intact. And I would agree that 5,000 or even higher is something which is definitely probable. And 4,000 to 4,500, in my opinion, is, it's very, very high probability.
Achievable. A final question then, Amit, and this one is on the US Treasuries. I mean, and you follow them very, very closely as well. With the way we've seen, and it's a frenzy across asset classes. I mean, with what equity has been doing, 1,000 points up and down on days when gold has been moving $100 as well. From here on until the next 90 days, that is when there's a pause on various countries in sense of tariffs. What way would you want to trade?
So I'm actually bullish on long-term US Treasuries at this point. So the 20-year US Treasury bond is now trading at 4.95%, and the 10-year one is trading at about 4.45%. So what has happened is that the gap between the short-term treasuries and the long-term treasuries has gone up a lot because of loss of confidence in the US economy, and plus the fear that the Chinese central bank may offload their treasury holdings. I don't think they will go that far. And I think the treasury market is one of the biggest asset classes and the biggest market in the world. I don't think that just because one central bank, of course, they are a big one, they have $3 trillion of dollar holdings, but I don't think they can really break the backbone of treasuries. And I don't even know whether they would want to do it. They would at some point of time get back into business with US. It's still not a game over for US and China to, again get along on some kind of a reconciliation mode. So my sense is that US long-term treasuries are a great buy. I think dollar index is kind of bottoming out, and I think it's probably topping out for the medium term.
Point taken. We've noted all of that down. Amit, thank you as always for joining in and making a sense of what the market really could be doing days ahead. And with that, that's all the time that we have on the show, but Business Lunch will take all the action forward.